Right, Earn2Trade, new series. Let's kick it off.
You pay, you pass. You are told you are a funded trader. 94% of funded traders on this platform are in simulation. No real trades reach the exchange. Roughly 5% trade real money through a funding partner and regulated futures brokers. The disclosure exists in the help documentation, not in the marketing. A 30% consistency rule means no single day can account for more than 30% of your profit target. One exceptional day that produced 35% of your profits and you fail. Reset. Pay again. 4.7 out of 5 across over 4,500 reviews. The strongest reputation in its tier. No regulatory actions, no class actions. The thinnest complaint record across 2 full series of prop firm research. A Hungarian founding team that built an evaluation where the education is integrated, the rules are strict, and the vast majority of funded traders are in simulation while believing they have been funded for real. The platform grew out of a Hungarian trading education community. The founding team identified a specific gap in the futures trading world. Skilled retail traders who could pass professional level performance tests but had no access to capital. The prop firm model existed for institutional desks, but not in a form accessible to retail traders globally. The chief operating officer, chief financial officer, and creative lead are all Eastern European. The pattern is common across the prop firm industry, where founders from Hungary, the Czech Republic, and Israel built many of the category's major platforms. The legal entity is registered in Wyoming with operations variously reported in Florida. The Hungarian operational base means development and support resources cost less than American equivalents. The regulatory structure is identical to the Tier 1 firms in the previous series. No registration with the futures regulator or the industry authority is required because the company is structured as a simulation and education provider. Traders pay evaluation fees for educational access and the opportunity to be offered a funded position. The actual funded accounts, when real, are operated through regulated futures brokers. The primary funding partner routes real capital accounts through 2 named clearing firms at the exchange. Additional funding partners provide routing flexibility. The education integration differentiates this platform from pure evaluation factories. Trading journal integration, video courses, and community support are included. The roughly 10% pass rate suggests evaluation discipline rather than easy pass-fail manipulation designed to maximize reset fees. But what happens after you pass is where the distinction between this platform and its marketing becomes important. When you pass the evaluation, you enter a 15-day validation phase, followed by a processing period. During this time, your monthly subscription continues billing. A trader who passes at the start of a billing cycle can pay an additional month before trading begins. The funding partner contacts you and assigns either simulation or real capital status. Roughly 94% go to simulation. Roughly 5% trade real money through regulated futures brokers at the exchange. In simulation, orders appear to fill at live market prices. The profit and loss reflects live market movements. But no actual trades are sent to the exchange. No real capital is at risk. The trader receives their profit share from the funding partner's operating budget rather than from actual trading profits. The 30% consistency rule catches traders who had genuinely profitable evaluations but with uneven day distribution. On a 50,000 account, the profit target is 3,000. No single day can exceed 900. A trader who makes 1,200 on day 3 and 2,000 across the remaining 9 days has failed. The rule exists to prevent evaluation gaming. It also punishes natural variance in skilled traders. Documented denial triggers include consistency violations, news trading holds, and overnight position holds. A trader passed the evaluation and was given a live funded account. After recording first profits, the account was terminated by Earn2Trade's funding partner, citing the activity as gambling or high risk. Platform fees for data and charting add roughly 140 to 156 a month on top of the advertised evaluation price. The headline cost does not include these. But the broader picture of where this platform sits relative to every other prop firm in this research determines whether the evaluation is worth the entry fee. What is not documented in the complaint record matters as much as what is. No mass account closures, no retroactive rule enforcement, no payout denial patterns after multiple successful cycles, no dollar-specific denial cases with named amounts. The Tier 1 firms in the previous series documented all of these. This platform documents none of them. The thinnest complaint record across 2 full series of futures prop firm research. The 80% profit split is lower than the Tier 1 competitor that offers 100% capped or the one that offers 90%. It is standard for the tier. The maximum funded account at 400,000 is higher than most Tier 1 firms. Weekly payouts on Wednesdays with a minimum of 100 after generating at least 200 in profit. Free resets on some evaluation tiers. The promotional entry at roughly 68 makes it the lowest cost evaluation entry in either series. The educational integration is the genuine differentiator. Trading journal tools, structured courses, and community support are included in the subscription. Pure evaluation factories charge you to take a test. This platform charges you to take a test and provides the education to help you pass it. Whether that education translates to profitability is a separate question. The roughly 10% pass rate is higher than some Tier 1 firms. For most practical purposes, the distinction between simulation and real capital has no consequence for the trader. The profit share is the same either way. The payout arrives the same way. The trading experience feels identical because the simulation uses live market data. But the philosophical distinction matters. Funded trader implies trading firm capital on real markets. Simulation trader is closer to a highly paid practice account. The disclosure exists. Whether you find it before paying depends on how carefully you read the help documentation. Earn2Trade is the safest entry point in this tier of futures prop firms. The strongest documented reputation across 2 full series of research. 4.7 out of 5 across over 4,500 reviews. No regulatory actions in over 8 years of operation. No class actions. No mass closures. No retroactive rule enforcement. No payout denial patterns. The thinnest complaint record. The educational integration that differentiates it from pure evaluation factories. A promotional entry at roughly 68 that is the lowest cost in either series. A maximum funded account of 400,000. Weekly payouts. But 94% of funded Earn2Trade traders are in simulation, not trading real capital, not sending orders to the exchange. The disclosure exists in help documentation, not marketing materials. The 30% consistency rule catches skilled traders with natural variance. Platform fees add over $140 a month on top of the more advertised price. The 80% split is lower than Tier 1 competitors. Subscription billing continues during the post-pass validation delay. A funded account was terminated after first profits, citing the trader's style as gambling. If you are a developing futures trader who wants evaluation access, with integrated education and the cleanest documented track record in the prop firm space, this is the platform. Know the simulation distinction before you pay. Know the consistency rule before you trade. Know the platform fees before you compare prices. The evaluation is strict, the reputation is earned. The funded account may not be what you think it is. Read the help documentation before you pay the first month. Every choice is a trade-off. At least now you know what you're trading.